Right, good morning everyone. We're going to be looking at compulsory insurance. So remember we spoke about non-compulsory insurance, which it's voluntary, you do not have to take it. So today we're going to look at three types of compulsory insurance. So we first need to understand the meaning of compulsory insurance. It is insurance that is required by law before business or individuals may engage in certain activities. Compulsory insurance is intended to safeguard the welfare of everyone concerned. It is regulated by government and does not require insurance brokers or companies. Payment is in the form of a levy or a contribution paid into a common fund from which benefits may be claimed under certain conditions. Right? So it's governed by our state and it's not done through an insurance company. So there are three types of compulsory insurances that we need to study and know well. The first one is UIF, which is the Unemployment Insurance Fund. Then it is the Road Accident Fund, or what is going to be called the Road Accident Benefit Scheme. And then the Compensation Fund, compensation for occupational injuries and disease. So those are the three compulsory insurances. The first one I'm going to talk to you about is UIF. So UIF provides benefits to workers who have been working and become unemployed for various reasons. The business will contribute 1% of the basic wages towards UIF, thereby reducing the expense of providing UIF benefit themselves. Employees also contribute 1% of their basic wage to UIF, and this happens on a monthly basis. However, if the employee decides that he no longer wants to work, they cannot claim UIF. All employees who work at least 24 hours per month are required to be registered for UIF, so it is the business's responsibility to register all the employees. It is an affordable contribution that makes it possible for business to appoint substitute workers in some instances. The business cannot be held responsible for unemployment cover as the UIF pays out to contributors directly. Businesses are compelled to register their employees with the fund and to pay their contributions on a monthly basis. So now that we understand what UIF is, we need to look at the benefits of UIF. So employees who become unemployed or they are retrenched due to restructuring or their contract has expired can claim within 6 months of becoming unemployed. So you have 6 months from when you were unemployed to start claiming. Unemployed employees may only claim if they contributed their 1% to the UIF fund. Unemployed employees enjoy these benefits until all the funds have been exhausted. So it doesn't go on for 2-3 years. It's normally up to 17 odd weeks. If a worker voluntarily decides to terminate his or her contract, then he or she may not claim. I did mention this earlier. No tax is payable on unemployment benefits. The second benefit is that of illness benefits, sickness, or disability. So employees may receive these benefits if they are unable to work for more than 14 days without receiving a salary or part of the salary because they are ill or disabled or sick. Employees may not claim these benefits if they refuse the medical treatment that has been offered to them. Then we look at the maternity benefits. Pregnant employees receive these benefits for up to 4 consecutive months, so that means one after each other. If an employee had a miscarriage, she can claim for up to 6 weeks or 42 days. Another benefit of UIF is that of adoption benefits. So employees may receive these benefits if they adopt a child younger than 2 years old. Employees who take unpaid leave may receive part of their salary while caring for the child at home. Only one parent or partner may claim this adoption benefit. And lastly, we talk about dependence benefits. Dependents may only apply for these benefits if the breadwinner, the person who brought in the most money into the home, has contributed to UIF and has since passed on. The spouse of the deceased may claim whether they are employed or not. So the second compulsory insurance that everyone contributes towards is the Road Accident Fund or the Road Accident Benefit Scheme. For the purpose of this video, I'm just going to say RAF. So the RAF insures road users against the negligence of other road users. The RAF provides compulsory cover for all road users in South Africa, which includes South African businesses. Drivers of business vehicles are indemnified against claims by persons injured in vehicle accidents. RAF is funded by a levy on the sale of fuel, diesel or petrol, and as from April 2020, it's R2.02 per litre goes to the Road Accident Fund. The amount that can be claimed for loss of income is limited by law. The next of kin of workers or breadwinners who were injured or killed in road accidents may claim directly from RAF. Injured parties and negligent drivers are both covered by RAF. The injured party will be compensated irrespective of whether the negligent driver is rich, poor, insured, or uninsured. RAF aims to provide a benefit scheme that is reasonable, equitable, affordable, and sustainable. RAF aims to simplify or speed up the claims process as victims of road accidents no longer have to prove who actually caused the accident. RAF enables road accident victims speedy access to medical care as delays due to the investigation into accidents has been minimized. There's a story of about 10 years ago when a gentleman was riding his bicycle and he was injured as he fell into a manhole that hadn't been covered, and his claim was something in the excess of millions of rands. And since then, law has come in to say that any claim won't exceed a certain amount of money, because he claimed he couldn't work and hence he lost money, and so they now have capped how much you can claim. Right, we are now on to the third compulsory insurance, that is the compensation for occupational injuries and disease. So the fund covers diseases and workplace injuries, compensates employees for injuries and diseases that occurred whilst at work. Compensation paid is determined by the degree of disablement. So if I just hurt my finger, I'm not going to be able to claim for that because it doesn't actually affect my working condition. However, if I fell down the stairs while at work and broke my leg and hence couldn't go to work, I would then be able to claim. The contribution payable is reviewed every few years according to the risk associated with the type of work that is done. So if your work is sitting behind a desk versus having to climb scaffolds, the one where you're climbing scaffolds is a lot higher. The risk is higher, so the payment that the business has to pay is going to be higher. All employers are obliged to register with the compensation fund so that employees may be compensated for accidents and diseases sustained whilst in the workplace. The fund covers employers for any legal claim that workers may bring against them. Employers are required to report all accidents within 7 days and occupational diseases within 14 days to the Compensation Commissioner. Employers are responsible for contributing towards this fund and may not claim money back from the employees. In the event of the death of an employee as a result of a work-related accident or disease, his or her dependents will receive financial support. Employees do not contribute towards this fund. Employees receive medical assistance provided there is no other medical fund involved. And that is the end of compulsory insurances. Have a good day.